Hey everyone, my name is Timalyn Bowens, and I am America's favorite EA, and I'm also the owner of Bowens Tax Solutions, which is a Louisville-based virtual firm that focuses on helping first-generation entrepreneurs that owe the IRS $100,000 or more but can't pay today. But I'm also very passionate about preventative care and helping to fill the tax literacy gap so you don't end up being that taxpayer that owes the IRS and can't pay today. That's why I'm doing this W4 series. In today's video, we're going to go over how to fill out a 2023 W4 if you are head of household. Now, these are due to your employer by February 15th. However, most HR departments will let you update it throughout the year. So let's get started with step one, entering personal information. In this example, we have Billy B. Thornton. So we have first name, middle initial, last name, Thornton, social security number 867-5309-00. Okay. And when you're filling out your W4, you want to make sure that the name that you put here matches your social security number. The reason being, this W4 is later going to be used to create your W2. And you use your W2 to file your taxes. And whatever is on your tax return has to match what the IRS has on file from the Social Security database. All right, so you can save yourself a lot of trouble by making sure this is correct from the get-go. Now here we have the address. We have 1620 West 22nd Street. You want to make sure that you also have the city, state, and zip codes. We have Louisville, Kentucky 40291. And like I mentioned, in this example, household. Now, people get confused about the filing statuses. Head of household is only if you are unmarried and you pay more than half the cost of the home for yourself and a qualifying individual. That could be a dependent, which is your child, or it could also be a dependent that's a parent. You want to make sure that you check out the IRS rules for who a qualifying individual is to make sure that you actually qualify to be head of household and not just single. All right. So when we look at steps 2 through 4, step 2 is if you have multiple jobs or a spouse that works. We just went over head of household is if you were unmarried, right? There is an exception where if you are married and you've been separated the last 6 months of the year and have a child, you can still claim head of household, but that's not what we're talking about here. Right now, for this example, we're just looking at multiple jobs. All right. So let's say Billy Bob, for this first part, he doesn't have a second job, but he does have two daughters under the age of 17. So we're going to skip step 2 and go to step 3, where you claim a dependent and other dependents. Now, Billy Bob's total income is going to be $2,000 or less. All right. And then, like I said, he has two daughters under the age of 16. So what we're going to do is we're going to take the number of children he has, which is 2, and multiply the number of qualifying children under the age of 17 by 2,000. So right here, we're going to take that 2 times the 2,000, and we have 4,000. Now, he doesn't have any other dependents. Like I said, this could be maybe it's a child in college, but they're not under the age of 17. That would be an example of the 500, but we don't have that here today. All right, so we're just going to leave that blank. So his total amount for qualifying children and other dependents is going to be that $4,000. Now, this is important because when you put your child on your W4, so you are claiming them right here, this is letting your employer know to withhold even less from your paycheck each time you get paid. Because There is a child tax credit that is $2,000 for each child. Okay. So that $2,000 goes towards what your tax liability is. The tax liability, everybody for the most part has one. A tax liability is not the same as a tax refund. I don't have that much time to go into it right here, but I did do another video called 15 tax terms every taxpayer should know. And I go over the difference between a tax liability and a tax refund. You should definitely check that out if you don't know the difference, or you can check out the blog post I wrote about the same thing. So here for Billy Bob, in this example, no other income, no deductions. Deductions in this situation are going to be when you can claim more than what the standard deduction is for the year. Okay. So in Billy Bob's example for 2023, that's going to be $20,800. So if he has mortgage interest, state and local taxes, charitable contributions, more than that $20,800, we would list his deductions here. For this example, Billy Bob doesn't. All right. So what we're going to do right here, we need to make sure that Billy Bob signs this as Billy B. Thornton. And no, in this example, his name is not William, it is Billy. So we got Billy B. Thornton, the date, and that, folks, is how you fill out a head of household W4 if you have two children and no other income, which means you have one job for the entire year. Now, let's go back up. Let's say Billy Bob has two jobs, okay? Job number one, Billy Bob makes $30,000. Job number two, Billy Bob makes $50,000. So what we need to do, we need to go to the worksheet on page 4. All right. Let's get scrolling there. And I should have said chart. I'm sorry. So you'll see there's one for married filing jointly or qualifying surviving spouse. That is not the one we want to use because married filing jointly has a different tax bracket than what Billy Bob is going to be looking at because he's head of household. Same thing with single or married filing separately. We don't want to use this chart because this is not going to apply to Billy Bob's situation. Now, if you are single or married filing separately, this is the chart you would want to use. If you are married filing jointly or a qualifying surviving spouse, this is the chart you would want to use if you have multiple jobs contributing to your taxable income on the tax return. But in Billy Bob's situation, we're going to use this one at the bottom. We have head of household here. All right. So we're going to look this way for the lower paying job annual taxable wage and salary. Remember, I said it's $30,000. Okay. This is where we're going to get to use our algebra skills. The higher paying job is $50,000. So you see, we don't actually have 50,000 on here. So what we're going to do is use the one that's between 40,000 and $59,999. And then we're going to go across until we find the number where that intersects. So right here, we have Billy Bob. His intersects at $4,290. So Billy Bob is going to need extra withholding from his paychecks because what happens when you fill out a W-4, it doesn't take into account the other income that you have. So you have to do that manually. And that's why we're using this chart to find this number. So with that $4,290, we need to look at the number of pay periods that Billy Bob has left. So let's say that he gets paid 15th of every month from both jobs. All right. So he gets paid once a month. We would take that $4,290 and we would divide it by 12. So the amount that he needs in extra withholding each month is $357.50. Okay. So he could do this on the W-4 for the highest paying job, or he could do it from the lowest paying job. Another option that Billy Bob has, he could take this 357.50 and divide it in half. Oops, this is not a calculator. This is a PDF. Sorry about that. He could take the 357.50 and divide that by 2, which ends up being $178.50. And he could have an additional $178.50 withheld from both jobs. So one check isn't hit harder than the other. But we're not done. You want to make sure if you are head of household and you have multiple jobs throughout the year that you don't claim your children on both W-4s. Here's the reason why. Because job one, where Billy Bob is making $30,000, isn't taking into account the income from job two, where it's $50,000. You don't want both jobs to take into account your children because instead of giving you an extra $4,000 throughout the year of your paycheck, you'll get an extra $8,000 when you're only entitled to 4. So when that happens, you end up being under withheld and you owe the IRS. Maybe you've made this mistake and that's why you're watching this video to make sure that it never happens again. If that is you and you are anticipating that you're going to owe the IRS this spring, not a lot, under 10,000, but you know you can't pay it yet, you may be a great candidate for my ebook, which is Guaranteed Payment Plan. I walk you through how to set up a payment plan with the IRS if you are tax compliant. So that means you have all tax returns filed, and for the most part, your withholding has been okay. If that is you and you can pay off the debt within 36 months, you may be guaranteed a payment plan with the IRS. And the ebook will walk you through how to do that online or how to call and do that by phone. So I hope you found this video helpful. Maybe it doesn't apply to you, but if you have a friend or family member who is head of household, please, please, please share with them to help me on my mission to fill the tax literacy gap one taxpayer at a time, because taxes, especially back taxes, shouldn't ruin anybody's life.